All right. Good morning again, and welcome back to the discussions session. It is 9 a.m. Eastern now, and I've just entered a minute earlier just to bring out some space and also touch base with what we have discussed till now. Two stories we have touched in a simple format. I hope you have all received or gotten the handbook PDF. If you have not yet, then you can find it on the Telegram channel as well, or you can write an email to me and I'll send it across to you. These are the first basic steps that we are discussing here, and two more points, and I think we will be off to the next topic, and that will be alien waves. Believe it or not, five discussions on the wave front. Uh, that's the basic tenant and the corrective waves or the motive waves and different types of motives and corrective waves almost simplifies or almost makes us ready to do some case studies, and that would be the best part, believe it or not. All right, so just hang in. I mean, we are just a couple of more weeks uh, to begin case studies, and these discussions are just for 30 minutes. So uh, I'm always running short of time, and I'm try to explain it in a very simple and lucid manner, but some things are not possible in this small sessions, so we will take up later on sometimes. All right, but for now, as I promised, the Christmas gift, I will be discussing all the basic four principles and the five basic patterns or the basic topics in the wave principle as well. All right, in this series, January series. So let's get started off with the third simplified topic, that is understanding the trends. It will go for about 30 minutes. The system is running slow, and if I'm not able to do it fast, please. Okay, trends. Various analogies are there to understand trends, but believe it or not, this is the best in any kind of analysis. Once you're through with understanding the trends, uh, almost 80% of our job is done. There are quite a few number of theories. I mean, I've not studied all of them. It's a very practical sort of thing that I've gone through, but two two theories we are going to discuss. One is the basic part, which I learned and followed it almost for about 6 to 7 years until I came across the wave principle and gotten along with that from 2015 onwards. So let's understand the wave. The markets never move in one particular direction in this manner. Right? These are baby steps, but we need to take these steps sometimes. They will never move up in a straight line up or down. They're always uh, they're always moving in some kind of waves which form either a part of a larger trend. I repeat, they form either a part of a larger trend or just a counter trend. Now we will touch base with both trend and the counter trend. A simplified way to understand what is a trend is just four alphabets, that is A, B, C, and D. Many of them who have been with me for last 2 years would understand what this is all about. We started with an A, B, C, D format, and then we slowly graduated or turned around the wave principle. This is a simplified, very simple, but I believe it's very effective if you are by any chance starting or as a matter of fact, it doesn't require too much of knowledge to analyze the charts. But if you can simplify the charts by any one method, it could be trend or the combination of trend and trend lines and Fibonacci and support and resistance, and then put together the candlestick patterns. I mean, this is an amazingly powerful technique. If you can bring five things together, the trend, maybe an ABCD, doesn't matter. It's an absolutely simplified version to understand a trend. Support and resistance, we've done the story. Trend lines we'll touch base right now. Fibonacci will touch base tomorrow maybe, and candlestick patterns. If you can bring these five techniques like a gel, uh, tremendous amount of confidence can be gained in any form of trading, whether what instrument you are trading does not matter at all. A chart is a chart is a chart. A simplified way to read a chart is the only thing that you require. So how is this ABCD works, or how does it work? The lowest point, you begin with the lowest point of the particular time frame that you want to set up your charts for. It could be daily or 4 hour. We'll touch base with time frames and equity management in one of the sessions this week. Start with the lowest point. If it is a rising market, with A, first stop or first break would be a B, and then from where markets again pick up would be a C, and another high. Please remember, another high above B, a significant high, not a test, would be plotted as D. So you have your first A, B, C, D. All right. When this is done, you don't go E, F, G, H. This was the best logic that I got, and I was really amazed by the way it goes by from here. After your ABCD is complete, just turn your C into A and D into B. Believe me, even today when I get stuck in the wave, sometimes anybody, one simple declaration. I mean, don't think that I'm and I don't consider myself to be the uh, and I'm not one of the best, okay. But what I like is to discuss and to keep learning. Actually, that's the best part of the analytical side. I mean, you cannot boost yourself to be always right. I mean, you're not God, and you can go wrong, and you should be humble enough and to accept that, okay, fine, you're an idiot and you didn't get that rally or that drop, and that's fine. I mean, you need to forget and move on, and that can happen only when you have that learning attitude, and if not, then it's a problem. So whenever I'm discussing in the class, you'll be if you pay attention, that's a different energy that flows across, and that is what is working after these sessions. Actually, this is the passion which works around the educational sessions, especially. And sometimes I forget what's being discussed after that. So some divine energy is working behind that as well. It's not mine. It's somebody else's. So what I'm doing here right now, if you're paying attention here, when your ABCD is done, what you turn is you turn your C into A and D into B, and then the sequence continues. Keep on changing your C's into A's and D's into B's until you have and you will find a point where you are left around with the current or recent AB boundary. Alright. Now this is historic. What we've seen is a historic thing. Why you need to come towards the last AB boundary is simply to be able to trade the markets now, if they are going to continue this trend further. All right, so that's very important. It's very important that you have your AB last boundary or last workable boundary. You must have heard number of times in the live sessions as well that we always keep on talking about the working boundary, the boundary which is being worked upon right now, is between, like what we did in gold, 1357 towards 1236 was the workable boundary, touching base with the 61.8% and stuff like that. So please plot your uh, wave counts like this, and so how do you define your trend? I mean, everybody knows that, but let's just repeat it once. But any rising market, I mean, what is the property that you see? Two properties you'll commonly see: higher highs and higher lows. When this sequence is continuing, it's forming an uptrend, and when that breaks, something else is just about to happen. It is not certain, but it is just about to happen. And if you draw your trend lines, how do you do your trend lines? Is, I mean, you can connect the dots. Oh, sorry. Connect the dots of the lows here, the last wave, that is A, B, C, D. I'm connecting the two dots A and C, and slightly external trend line will be when you connect the lows beginning from the first low, that is A, and you don't cut a candle at all. When I've seen many technical traders, they follow a different method, and that's not wrong, but I've learned to connect the lows or highs across uh, the waves that you're trying to analyze without cutting a candle. So that's your trend line which you supposedly draw. It's the internal and the external lines which you call, or the inner and the outer, as you must have read through the handbook as well. This is for all of us. I mean, do not hesitate. I mean, you should be encouraged to pass on this handbook to those who are may think it's going to help them. All right, so A, B, C, D's, and then C turns into A, D turns into B. Two rules that you should remember here is that your C point, that is very similar to the Elliott wave principle as well when you talk about wave 2. Here, in a simplified version, the point C should not go below A. I repeat, sir, point C should not go below point A, and then D should be significantly, or it should be above, it should be printed above B for the waves to be counted as an AB boundary. Right, so two main rules here. C does not have the capacitor, should not drop below A, and D should be way above your B for Bombay. All right, so with these two rules and the trend lines, how do you draw your trend lines? Connect the lows A and C of the recent ABCD on your chart. You'll have the internal or inner line, and you connect starting from the lowest point A and connecting any of the C's or all of the C's which come across the path without cutting a candle. Which path? The path between first A and the last D. So in the entire path you don't cut a candle. Simplified, last wave you connect A and C without cutting a candle. That's your internal, and the other one is your external trend line. Why these trend lines are important? I'll give you a very small example here. Let's say the markets are reaching that particular trend line, and it produces a morning star. What would you normally do here, or what should you normally do here? Prices drop lower from the D point or recent AB boundary, and they gradually touch the trend line somewhere here, the support trend line passing, and they produce a morning star. What do you do here? Without even asking yourself, you should right now go and buy this morning star. Okay, you got to buy this morning star. Now don't ask what is a morning star, because we have discussed, and I think this is what is the best part, when you discuss four pieces separately and then put it all together at once. So a morning star, we are buying this morning star because of several reasons. We'll come back to that. All right. If if at all it continues dropping lower, that means we can conclude that the immediate trend line support is getting broke. Maybe there are several options after that. It could go and touch the external trend line, find support there and bounce, or it could even break the external trend line. So you come to know that, okay, this trend which was going on from X amount of time might be looking to turn around, and maybe another trend, temporary or permanent, would begin. All right. So if you are doing your lines, it's only going to help. Okay. Let us form a general set of the trading style when you see an uptrend now. Where would you think, just a simple layman question, where would you think on this chart that you would have bought or sold, should have made some money on this particular historic chart, which is already done? Just ask yourself a simple question: where would I bought the market, and where you would have sold that, so that you'd have made some money? Let's do it together. Several answers would have been coming in. I don't have a different device to see your interactions, but we'll soon have one. And I'm planning for an interactive session as well, for questions and answers very soon. You must have said at this point or that point I would have bought, or these points you would have bought, and you would have sold by taking profits around those points. Or you must be saying that, okay, I'd buy this first point and I would sell at the last point, right? So all are correct except one, actually. Uh, the first A could be slightly problematic, because if the market was coming dropping like that, no way there was any reason for us to believe that there's something else going to happen, right? At this point in time, it was a downtrend, it could continue going down. Suddenly, if this wave erupted, which took off almost the previous highs over there, then you would tell yourself, okay, fine, bulls are scoring a point here, so that maybe you have your first boundary in place. That is your AB. Yes, after that resistance was broken. So that boundary would have, anybody, unless and until we are bottom fishing, anybody would let this boundary go. It's a simple story. Let the first resistance or support break. That would be your AB boundary, and then on a pullback, you find an entry to buy. So you're buying, if at all it begins from point 2 and not from point 1. I hope that clarifies why we are not buying it. So all these points from second onwards, second, third, fourth, and fifth, we would have ended up buying And don't forget, these are all your what? These are all your supports as well. The highest point of the rising market, S1, S2, S3, S4 and S5. These are all your supports as well, and you would have bought at that price. Certainly you would have also gotten some kind of a bullish signal here, right? Which is we've done this practical as well. So you would have bought at CA and then you would have sold at, depending on what profit factor you want to have, you would have sold at DB. It could be this DB or maybe that DB or maybe that DB. But the generalized version or the generalized trading style would be, we would have bought at CA and would have sold at DB. Yes, if you want to still simplify this, how do you do that? Instead of CA, I want to just one figure or one letter, sorry. Can we just say buy the C and sell the D and eliminate AB? I think we can do that because C is your first occurrence and that C turns into A. A does not turn into C. So buy the C and then sell the D. Is that okay? So this is a logical way to trade any uptrend. I hope we are simply going by logic, a very simplified way to understand trends. We'll do a practical for this in the next session as well. Unless we do that, it's not going to make much sense. So once again, A, B, C, D, and then turn your C into A and D into B. Repeat the cycle unless you have your final AB structure or boundary that's being worked upon. Now let's say if you already decided what to do, we'll have to buy the C and sell the D to make money, right? It looks very simple. It actually is very simple if we keep it simple this way. Sometimes I myself get confused and that's the point when I go back to this strategy. Okay, so how would you like it if we can find out a way to buy the C and we can find out a way to sell the D? The rising market, so logical is to buy first and sell second. That doesn't mean that we don't sell and buy. We do, but that is an aggressive category. Always I mention, if you're an aggressive trader, you can go do like this, or if you're a conservative trader, wait for like what we did in Euro USD. If you're a conservative trader, wait for the next C, which is expected at 1900 levels. If you are an aggressive trader, you can go short with a stop loss of what previous high, expecting that is a T, right? So, but a very conservative way to trade an uptrend is to buy the C and sell the D. Now, what are the ways to find out where the C could occur? Please watch out for these 4 junctions or convergences. Please look out for the trend line somewhere in the vicinity of the trend lines. Then if it's a rising market, then past resistance becomes future support, right? Or if it's a dropping market, what past support has got the potential to become future resistance. We talked about this in the second story, support and resistance, if you remember. All right, and then what would be the third point? You've seen me doing this time and again. Without this, it's very difficult. Fibonacci ratios. Look out for the Fibonacci ratio passing through the price action. I think we will discuss Fibonacci straight away here. So look out for that Fibonacci ratio. And what is the final point? Signal, buy or a sell signal, and then take action. I don't know if everyone has been since the first story, but if you have been watching since the first story, what we discussed was what, when, where, and why. When we answer these four questions, we are ready to trade. Now, what to do was the first session: buy or sell signal. When, where, and why. I think the answer to that you must have gotten by now. The answer to all three questions, when, where, and why, is a place called C, where you're where you're wanting to look out for a convergence of trend lines and PR becoming FS or PS becoming FR, or the Fibonacci ratios or the signal part, and then take action. So now we know the first session where what we discussed was, you see a morning star, please don't simply go and buy it. You see an evening star, please don't simply go and sell it. But if you see a morning star around these levels or around the combination of these levels, at least one or at least two of them, all right, or maybe sometimes you'll find all the three of them combining at the same place, and you get a signal to buy or sell according to the trend. Go ahead and buy it. All right. How do you do your Fibonacci ratios? Here it is. Just spread your retracement. Retracement is where you find out the entry levels. We'll discuss this tomorrow or day after. And extensions are where you find out your exit levels. Spread your retracements through the AB boundary and find out if one of them is converging with either the trend lines or the past resistance becoming future support. Like, say, for example, in this on this figure, there is a convergence coming, the past resistance becoming future support between the 50% and the 61.8%. So if you just imagine prices dropping here lower and touching the 61.8%, there is a convergence of a trend line, and then there's a Fibonacci ratio and the past resistance becoming future support as well. Just wait for a signal here, and you're ready to go. Have your stop loss placed just below the past support. There goes your stop loss. Is that okay? Now we are doing the third story, and we discussed that by the end of the third or fourth story, you would be 80 to 85% there if you had kept patience for these many hours, and not many actually, just about 4 to 5 hours, like that. You would have, sorry. That's your stop loss. All right. Anything which is discussed over there in the handbook, it's been briefly discussed here in a practical manner. If you do have queries or any doubts, please do write into me by any means. You can contact me in WhatsApp or Telegram, or Telegram not possible, that's a channel, but you can reply the comment here, or send in an email to me, and I'll do my best to get back to you, brothers and sisters. All right, so let's get this session to a pause now, and tomorrow we'll be back again during the same time, 9 AM Eastern, to touch base with the practical part of understanding trends and trend lines. Until then, good luck to your trades. If you're liking it, do say that you're liking it. and do not forget to subscribe to this channel. It's going to be for life. Many things planned up, all in my mind right now. One by one they shall be executed, and I want this family to grow in millions actually in the coming days to or the months, right? 2019, the 1st of January, let's be all together and let's be in a celebrative mode. But we've got 365 days of good work to be done, and good luck to your trades, brothers. And we'll be making it sure, or trying at least for that, we make at least 5,000 pips for this week in this year. All right. So, thank you again, and do help me spreading word for this channel as you always do. God bless you. Goodbye.